Hi everyone, welcome back to the Property Finance Podcast, and today we're carrying on our series of FAQs, and today I want to talk about how long a mortgage offer is valid for. So we're going to touch on, obviously, buy-to-let mortgages, HMO mortgages, serviced accommodation mortgages, bridging and development finance. When it comes to bridging and development finance, obviously the terms are normally valid for about a week to begin with, and then what we find is once we get into the application process and once we've been issued with a formal set of terms, they are normally then about 30 days for you to then obviously get valuation, etc. Instructed. And once we get to formal offer, you then normally have 90 days. What we find is a little bit different with bridging and development finance is depending on how the lender is funded, what they'll do is they'll actually hold the funds for a certain amount of time. So we have a couple of lenders who on their initial AIP will say, we will hold the funds for 30 days, for example, or 90 days, whatever they set on their terms. And then what will happen is if the deal doesn't complete by that time, they then reserve the right to essentially reanalyze the deal. So what that does is it, from the outset, sets a really, really tight schedule that we have to achieve, which on bridging and development isn't as bad, but it sets that really tight schedule to go, right, we've got to do this within 30 days. Otherwise, things are going to start getting looked over again. With bridging and development, what we've found actually is with the valuations, we used to have it so that the valuers would allow maybe 6 months for their valuations to be relied upon. Then it became 3 months. Now it's becoming maybe potentially a month, 2 months. So what we find is that once the valuation's taken place on bridging and development, you've got to move so quickly because if that expiry on the valuation hits, you run the risk of then having to pay for another valuation. So it's really important that when you're looking at bridging and development, that you understand that once that valuation's in, if we've got 3 months to rely upon that report, obviously, that's got a good amount of time. If we've got 30 days, 60 days, it makes things a bit tighter. We've really got to move quickly and make sure that the deal completes in a timely manner. When it comes to buy-to-lets and HMOs, SA, etc., what we find is once you've got the AIP, you've then got your sort of 3 months potentially to rely upon that. Although, again, each lender is different at the moment and they're sort of shortening that time period, obviously with interest rates changing. So if we assume that most will allow maybe 30 days on that initial AIP, once you then get through to offer, most of them will then allow 3-6 months for that to be relied upon. Again, each lender's slightly different, but it's a longer time period. Bridging and development is about being very quick, very snappy, whereas buy-to-lets, they understand that this process takes a bit longer. So they'll allow a longer period of time. With all of them, with buy-to-lets, HMOs, service accommodation, bridging, development, all of those offers can be extended at the lender's discretion. So as a broker, what we'll do is we'll keep an eye on those dates. We'll understand, right, okay, well, we've got until this time period for the offer to expire. We've got until this time period for the valuation to expire. We keep track of all of those dates. And then what we do is as the deal progresses, if we feel like we're getting close to an expiry date, then we'll go to the lender and say, look, will you extend your offer by a month? Sometimes we even go and ask for maybe a week or a couple of days if we're really close to completion. And what we'll do is we'll go and ask for that. And then if they want to extend it, great. We've got that extra time period. If they don't, we then have to go through, obviously, the reanalyzing of that deal. And they'll then issue a new offer, which then obviously grants us that new time period. But what we tend to find is 9 times out of 10, actually speaking to the lenders in advance, making sure that we're not running everything to the wire. They are pretty happy to extend offers. Valuers are happy to extend valuations, as long as it's not being left till the day before completion. So it's always worth keeping track of those dates throughout the process as much as possible. But hopefully that gives you a good idea of the time periods that are involved in each of these deals. Thank you very much for listening. Catch you on the next one.